Hello everyone, my name is Jeff Cornell and I'm a Senior Portfolio Manager here at Johnson Investment Counsel. And this is a JIC Research Edge. Today I'm joined by Brian Kute, who is the Research Director here at JIC. Brian is also the manager of the Johnson Opportunity Fund. At Johnson Investment Counsel, one of the things that makes us unique versus other advisors is our in-house research staff. Brian manages a team of equity research analysts who are responsible for recommending stocks for our equity income strategy and our SMID cap core strategy, which most clients access through the Johnson Opportunity Fund. Today, Brian is going to provide a behind-the-scenes look at how the JIC research team picks stocks. But Brian, before we jump into the stock selection process here at Johnson, could you give us a brief introduction into equity strategies and what their objectives are?
Sure, Jeff. Our large cap strategy is the Johnson Equity Income Portfolio. This is a portfolio of 40 to 60 stocks that are larger size companies with an attractive quality characteristic, and they often pay a reliable dividend. Our Opportunity Fund is of smaller size companies. So it has 70 to 90 stocks in the portfolio, and these stocks have an attractive combination of quality, valuation, and momentum. The Equity Income Portfolio and the Opportunity Fund are intended for a long-term investor. So as we think about stocks and consider what their outlook is, we're looking at 3 to 5 years and often longer. We recognize that high-quality stocks and undervalued stocks are not always in favor with the market, and that often it takes a full market cycle for them to demonstrate their worth. But with a disciplined, patient approach, we found that quality stocks win in the long run. Portfolio construction is an important part of managing risk, but as active managers, stock picking is what differentiates us. And our process includes our research analyst performing in-depth security analysis.
So Brian, how does the process play out when an analyst is recommending a stock for the portfolio? What exactly are they looking for?
Our team of analysts are sector specialists. So they are focused experts in their assigned sectors, and their process involves speaking with other industry participants, whether that's a company management team or other analysts, to gain particular insights. And they also have access to very sophisticated quantitative tools that we've developed that help them take our set of criteria and quantitatively find companies of interest. So the combination is really both art and science. Both parts are important to our process. After analysts generate that initial idea, they begin a process of understanding the company's products and services. This includes a competitive analysis as they assess what the company's long-term growth prospects might be. One word that is a defining characteristic of every stock at Johnson is quality. Typically, these are not the hot stocks that risk-taking traders seem to favor. We're looking for talented management teams who have carved out a strong competitive position. We also favor companies that have better balance sheets and more consistent results than a typical company. Once we have determined that a company meets our definition of quality, we model our financial projections and estimate what we think the stock is worth. If the stock is both high quality and attractively valued, the analyst will present a report of their findings to the strategy team. The strategy team discusses that recommendation and determines if the stock is added to the portfolio.
You talked about having a 3 to 5 year time horizon for holding a stock. So obviously we like to hold them for an extended time period. But what are the reasons a JIC team would have for selling a stock?
Our turnover is fairly low, which indicates we do hold most stocks for multiple years. But it's often the case that over time stocks become overvalued or something unexpected happens that changes our outlook for a stock. So if a great company becomes too expensive, we may look to sell. Or if a company fails to execute their strategy or we lose confidence in that original investment thesis, it's often better to sell that stock and invest in a better idea.
Thanks for your time and the hard work of your team, Brian. And thanks to everyone at home for watching. Let your portfolio management team know if you have any questions.